We've got CPI issues, right? CPI is on Wednesday, and CPI will likely be a very market moving event, because here's the thing about CPI, or inflation, right now, right? Inflation has been trending down, but then recently we saw a little bit of an uptick in inflation. The thing about economic data is, just like how a technical trader might apply a moving average to look at the price action, a moving average, or just a visual average, is also really key on fundamental data. So what I mean by that is that if you were to kind of put a simple, 3 or 7 period moving average, it would probably look something like this, right? And what we've seen is inflation cooling, but the question is, are we going to get a bit of a breakout in inflation? And if inflation starts to rise, what does that do to the market? And I'll tell you, I think that if you get a tick up in inflation, it could throw a wrench into this whole story that we've had recently, that we're going to get the perfect soft landing. Now, I am not, coming out as a straight up bear on the market, but I think that the market right now is priced so much for perfection. Everybody is bullish right now on the stock market, and I can show you that, right? I'm not just saying that off the top of my head. I can show you some stuff that would give you a good example of that concept. You can see that the put call ratio has been hovering in low territory for a minute here. Now, the put call ratio is one of my favorite indicators to look at for sentiment, because what it does is we look at the S&P 500 options volumes, and we say, look, if this number goes high, that means that everybody's trying to get in on some put buying, right? They're buying puts. They're out there getting defensive. They're getting scared. They're buying protection, right? Puts are bearish bets and can be used as insurance to hedge portfolios. But my point is, a lot of investors got real bearish, real scared ahead of the election, and that ended up being a really good opportunity to actually take longs. But we have to be fair. When the put call ratio is very, very low, be cautious for possible reversals in the other direction. So when we look at stocks, right, stocks are up and away. It seems impossible for the stock market to come down right now. It doesn't ever come down. It goes up every single day, it seems, until it doesn't. And I'm not a bear, but I'm pointing out that when you get market moves like this, just be careful that you're not on the same side of the boat as absolutely everyone else. So I am bullish, but I want to see the boat normalize a little bit. Think of our boat, right? If this is our boat, tilted, right? This is the boat tilted, or the boat, flat, or the boat tilted the other way, right? Let's imagine that we're looking at the front of the boat, and is it tilted one way or the other? This is, sentiment. This is a sentiment. This is a sentiment. Right now, if this is bearish, right? If the boat's tilted really bearish, or the boat's tilted really bullish, right now, we're like right here. Everyone is so bullish. And the reason that is very key to watch is that when you have everyone's over here, right? Everyone's piled up over here. When something comes along to spook the market a little bit, right? Just a little bit. For example, I'm not saying this is what I think is going to happen, but if we got a scare in inflation this week, what happens? A lot of these people shift. The boat can flip very quickly if everyone's on one side of it. Does this make sense? And this doesn't just go for stocks. This goes for everything. When everybody is their sentiment matches the same way. You just have to be careful. Now, sentiment itself is a really poor timing vessel. It's really bad. Like, just because everybody's on one side does not mean, it's going to crash tomorrow. But what it does mean is that when a fundamental catalyst comes along that creates a jump in sentiment the other way, it can be very violent if everyone is on the same side of the trade. There were plenty of people who were very bearish on gold all year long, and they got smoked by this rally, right? So I don't like to be contrarian just for the sake of being contrarian, but I do like to pay attention to sentiment, and it's a really important indicator. So when we look at put call ratio, where it is for the stock market specifically, again, I think that is tilted a little too far bullish, and that there is some room for a pullback. And if that pullback happens, then I'm happy to, buy into that rally. I've got some indicators currently telling me for looking for bullish setups. NASDAQ's the top rated bullish instrument on the Edge Finder at this time. So I would love a pullback, but I'm not going to chase when everybody's on one side of the boat. Hopefully that makes sense. Gold is also giving us a bullish reading right now, and a nice uptick in the price of gold today. Did you guys see gold up 1.3%? So I'm getting a bullish rating from the Edge Finder at this time. What that means, however, is I still have to find a good technical entry point, a good technical setup on gold. So we've got gold bullish rating on the Edge Finder. Great. What I'd be looking for would be a breakout of this structure high. If we get some strength coming into gold here, I love the idea of possibly trading it long back to those all-time highs and perhaps even beyond. But I need the technicals to really give me that confirmation. Did you guys see silver? This is a really positive thing for gold too. Even if you're not a silver trader, you should always be keeping an eye on silver because it moves really quick compared to gold. In fact, silver is significantly more volatile than gold. It moves on a percentage basis a lot more than gold. And so, you can see today, gold's up 1.3%, and meanwhile, silver's up 3.5%. Really big move. What's going on with the metals? Well, China popped over the weekend. Did you guys see this? We got some nice moves forming on the Chinese stock market, and I do have a long position going. So Chinese stocks for me working out this morning. I am long MCHI. It's an ETF that tracks the Hang Seng Index. And what we can see here is that this position is working really well. What's not working so well for me is what I did is I also sold a covered call on MCHI. So what that means is I'm pretty much capped on my upside right now. That inflation report last time around did tick up slightly higher. Question will now be, do we get a repeat of that? Are we going to get a 2.7, a 2.8%? So we'll see. If the dollar gets stronger, or do you think currently that the dollar has more upside? Here's the US dollar currency index. Is the dollar just pulling back here, or is this, do you think it has more downside? Where do you lean right now ahead of the CPI report?
Leading sideways. I was bullish last week, and probably is this week again, but I don't know. Seasonality is bearish. We have priced in high chances of a rate cut, as you mentioned. So where do I fall? As I can see both cases, I think it's incredibly difficult at the moment because we have everything is about nowhere extreme at the moment. It's just in between, like a 2.6 inflation, 3% GDP, 2.8 PPI, PCE is around the same thing. So nothing too crazy. It's not like 8 or 9 or where we can have some fun.
Yeah, no, I think as you just mentioned, there's some outperformance in terms of the U.S. economy that I do think is a part of the reason the dollar is so strong. We heard from Jerome Powell last week. He actually used the word to describe the U.S. economy, extraordinary, which I thought was really a strong take. Not much better words to describe it. So, extraordinary economy according to Powell, and partially here the upbeat, the surprise in U.S. economic data, I think is largely why the dollar is up, but perhaps it's also up a little bit off of the inflation questions that traders, investors have about the upcoming, Donald Trump return to office. Is that going to be inflationary? There's a couple things that I keep hearing people float around, like the idea, of course, of the tariff concerns, but then also the possibilities of what deportations, if that does become a bigger theme in coming years from the U.S., if deportations happen and that leads to a gap in labor supply, that could also be inflationary. So I think that investors are seeing a strong U.S. economy, and they're seeing a labor potential shortage as well as tariff situation. To me, it seems like the U.S. has a lot of potential for an uptick in inflation. But the caveat then is oil prices. Oil prices are down quite a bit, which helps with the inflation story. So you've got a little bit of a tug of war here on the inflation side, or expectations going forward.
Mm-hmm. I think you have to ask a Texan how what else do you call the senator made everyone to show their ID or wherever that crisis was a year ago or so, where all the documented or undocumented people that was in construction left or went home or got scared or whatever. And you can kind of, I think it was like a month, you can take that as a case study as what do you think would happen? And as far as I remember, as far as the reports I got, everything stopped.
Yeah, which, and again, we know from history recently in 2022, when you have everybody leave work, it is incredibly inflationary. Like the shipping container stuff, right? When everybody left the shipping containers getting shipped back to China to move product, when that stopped, when people left their workstation because of COVID, it was incredibly inflationary because the supply line of the world gets stopped up pretty quick. So, with the potential labor shortages, I know there's a little bit of a concern on that front. How real does that seem to you? Is that something you're thinking about with the dollar index?
Well, it depends. I think one, is it gonna be shown in the unemployment rate or employment rate? Sorry, or is it just gonna be people just vanishes? Because how is that going? Well, it's going to, in all essence, it's going to be inflationary. But then one thing that was mentioned in the Zoom meeting an hour ago in the VIP group was he also wants to spend a lot of money on ICE, on deportation. So he needs to print some money. And as far as I remember, he also had to help out some corn farmers because China doesn't want to buy corn from America during trade war. So he has to also start spending some money. That's another thing I haven't talked about yet.
Yeah, I mean, it's there's a lot of ideas and a lot of changes coming, and I think that to me, regardless of how you kind of think about those changes, if you like them, if you dislike them, one thing that we know for sure about the market in general is that the market doesn't like uncertainty. It doesn't like guessing what the outcome will be. It doesn't like knowing if Powell's going to raise rates or cut them, or it wants to know things. When it doesn't know things, it gets more skittish. It gets more nervous. So I don't actually. What'd you say?
Skittish?
Yeah, like a cat can be skittish, like runs away, like suddenly, like really easily scared. I think that the stock market too, specifically, I was mentioning earlier in the thing, I think that this thing is a little bit frothy. I think it's a little bit expensive. And I think that any one of those things that we just mentioned could at any point kind of, the embers are there to turn into something a little bit more concerning for the market. And I'm not necessarily saying I think that, there's a huge bear catalyst coming and that Trump's going to screw everything up. I'm not saying that at all. I'm just saying that the market doesn't know. And when the market doesn't know something, it gets a little bit nervous.
Okay. Yeah, I can agree to that.
What are your thoughts?
I still don't understand skittish. I mean like sliding, like falling and sliding, or
skittish. Basically, it's like, think about how. Do you have cats, Ivan? Do you have pets at all?
Yes, I have a cat.
Okay, I've got 2 cats as well. They're awesome. And sometimes one of my cats is really skittish, meaning that if she like hears a noise or something, or any little thing will make her run away. She's really scared. She's scared, skittish, kind of. There's your American vocab word today. Actually, it's not American. It's just English.
Or is this millennials?
Yeah. So, I think that the stock market could get skittish, to use our vocab word of the day, if any of these changes become more real. Not necessarily that they're going to be bad changes. It could be great changes in the end, but just the matter of changes could be a little nerve-wracking. So I want to get your thoughts on the indices, S&P 500, NASDAQ, Dow Jones. How are you thinking about these things? Are you feeling as nervous as I am with them? Again, I am bullish on them, but I think that sentiment is a little too bullish. They're too excited out there, and I don't really see any opportunities for me personally to get long on them when they've made such big moves. I got to wait for some sort of rebalance of the sentiment in the markets. Do you agree? Do you think you can just keep going? Are you long? Are you short? What are your thoughts?
I'm not skittish, but no, it's a bit overextended. But I don't know. Okay, maybe that's a different reaction to the same thing. I see opportunity. I am in a forward positive. Like, this is great, because if you're falling, then I would be a bit more depressed inside and everything. But yeah, as somebody else, can S&P drop in a 4 to 5% in a day? Yes, it can. I don't remember where the circuit breaker started. Is it 7.5 or so? Because it still did and still can during COVID crash. But yeah, it's more like over a couple of days. But 5% down is more than welcome if that's what the market decides to do.
Yeah, and I think it could happen pretty easily. I mean, a couple of years back in 2018, I remember during the Christmas holiday, there was just a really aggressive sell-off. Let me just pull that up. 2018, check this out. So this was back, I remember, right around Christmas time. We saw a very sharp drop in the stock market. And during this time, the story actually was, believe it or not, years ago, the story was trade war concerns with China got more real. All of a sudden, you had, and this is no 5%, this is a 20% pullback that occurred in about a 90-day span in the U.S. stock market off of those China concerns, those trade war concerns. Of course, the market did bounce back pretty quickly from that. But I think that when, again, you get into this environment where, I mean, look how similar that chart looks. It even looks the same. Market's just ripping higher. Everything looks good. And then just when everybody feels like it cannot possibly go down, the stock market can have some very sharp and aggressive sell-offs. So I'm not necessarily saying I think that's going to happen. I think it can continue to go up and up and up. But once the change happens, I'm just a little bit cautious about being on the same side as everyone else, being overly bullish.
The next 2 weeks are big, and it either is price either is supported by the news, interrupted by the news, or disrupted by the news. Okay, so what I mean by that is price is supported by the news, meaning that the news just makes the markets go higher, and the path of least resistance continues to be the same thing. Okay, interrupted by the news means, oh, hang on a second, things are a little messy, things are a little sloppy, but it just pauses and gets a little shaky for a moment, and then the initial trend or the already established trend is still in motion and can't be stopped. It just was a little bit of a head fake. Okay, disruptive is why I'm hedging. If we have something disruptive where all of a sudden we take out a previous low, we pull back and we fill some major gaps, and all of a sudden the trajectory we've been on just completely changes, that's disruptive. The news can do all of that, right? Supportive, interruptive, disruptive. I don't know what it's going to be, but it's enough for me to pay attention. Okay? All right. So just take a look at the simple indexes again. This is a 21 period moving average and a 50 period moving average. There's no major structural or technical damage done unless we were to take out this low right here. Okay? If we took out that low, then I'd say, okay, that's a pretty decent correction. That would be coming back towards the 100 moving average. And to me, between this 100 moving average and the 200 moving average, I would look to add more positions, and deploy some of that cash. Right? Until then, I'm going to be hedged to try to find the 21 and find the 50. I'm going to be hedged until we find those levels. If I lose on the hedges, so be it. Because for me to sacrifice, let's say 0.2% of my account on a hedge, but the market goes higher, look, I can get an extra 1% there. I can get an extra 2-3% there. I mean, today, my whole portfolio is up, I don't know, over 1%, 1.5%. just on a lift in China. So anyway, we'll see. I just want to be mindful that these moving averages could be retested. And if they are, I'll take off some hedges for some small gains. I'll look to deploy some capital if I like the levels I'm at. And I'm watching this in all the US markets right now. Okay, volatility wise, let's see where we're at. VIX is up about 8.6% on the day. We're going to see if these numbers change at all. Here's my SPY at 7.9 IV rank. Just make a mental note of that. You know, single digits IV rank. Does this jump up to 14 or 15? Does it jump up into the 20s? If so, we're probably going to have a bit of a move to the downside. Okay. All right. Dollar index. Dollar index. This is the one spot that I'm watching. I talked about this last week. On the 4-hour time frame, just don't take a head fake on the dollar. Okay. If the dollar is going to close below this 200 moving average, this is a 4-hour time frame. If the dollar index, this is DXY, closing below this 4-hour 200 EMA, if it closes below there, I'm looking to see, do we have a pullback and then a fresh low? I would look for a trend opportunity to see if the dollar is going to be fading some of this. Doesn't mean I'm short right now, because I said this market might still be bouncing off that area. Okay, still be a range trade on the dollar where it's supported in here, catching bid right around that 200 EMA. So I don't know, but this is the level that I'm watching. It's right around 105.50. So for right now, if we stay above 105.50, for some Forex scalping out there, I would look for the dollar to gain some strength. If we're less than 105.50, we want to see if there's some more downside to come in and find some, inefficiencies, or, okay, nice run on the dollar, come back and find some equilibrium, maybe be a big range trade. Okay. So it's just a couple levels that I'm watching. Really, it's that 105.50 is a really kind of critical spot for the DXY this week. Okay, we'll keep a close eye on that one. Oil prices, like you keep saying, this actually is a pretty shifty move to the upside. Oil prices on the day, up 2%. It's still making lower highs. It's still making equal lows. If we break the floor, it's probably good for inflation. If we break this structure and we get greater than, I'd say 71, if we get greater than 71, that's going to take out some previous highs. If we take out this high, take out this high, take out this high, that's probably showing that oil prices are looking to squeeze, right? And so do we get into the mid 70s? If so, that is probably not a good look for inflation. It's not that far away from either being like this market has to, break or fake out. I don't think a lot of traders, I wouldn't be surprised if oil prices go higher. I think that we are trying to force oil prices and try to bend it to our will of just go lower. Like oil price, I don't know. There's so many geopolitical things happening with oil that even a straight up Middle East conflict hasn't brought oil prices up. And now if we have domestic drilling in the U.S. and deregulation from the U.S. and maybe it stretches globally, I don't know. I don't see how oil prices are going to be, quick to gain. But the inflation shock, the quick like sticker shock would be like 75 to 76 would definitely be a bit of a squeeze. So the floor still sits around 67. Anything greater than 71, I think that makes inflation look a little bit stickier. Okay, natural gas, I'm going to wait on that one as well. Gold's got a pretty decent run finally after 8 days of indecision. I'd said this, I'm not really doing much on gold other than waiting, right? Yeah. Eunice, would you like to see gold? Type it in the chat a couple more times for me. Okay, we had 8 days of indecision. We're finally starting to get a bit of a break. Now, does that mean I'm going to do anything with it? No, because I'm already long. I'm still going to wait and see, do we have a correction? Do we have some? One thing that was nice, I saw gold ticking higher and I saw silver outperforming. So that's probably another reason that my portfolio is up today, because I do have some SLV, I do have some GLD, I have some SI futures and GC futures. That's good. Okay. But right now with this larger candle, all this to me is inside candle, right? There's no real confirmation that gold is going higher or lower until we break away from this big red candle right here. That nothing matters. Like this doesn't matter. This price action doesn't do anything for me. Okay. So I'm still prepared for a high, low, lower, high, lower, low. This is still where I'd like to add more to my gold exposure. If you want to draw a trend line and wait for more confirmation, then to let it get on the right-hand side of that trend line. Otherwise, this is inside this bar. It doesn't really matter. You know, it's a little bit exciting that gold's up 1.3%, silver's up 3.7%. That's great. Okay, we can compare that with a XAU and XAG chart. And we've also gone back on this one for the last, 6 to 12 months, and we've seen that since 2022, there's kind of a range performance on gold and silver. Now, the nice thing is both of them individually have been in a bull trend, okay? But when we see that this is heading lower, that means that silver's getting the upper hand right now. And I would love, personally, I'd love to see silver do this. I'd love to see silver outperform and come back into these range lows, and I'm curious where that actually takes the spot price of XAG. You know, I have a measured move around $38.80, and then my other one's around $44. So if I could hit target one on silver, whatever, this year, Q1, Q2, in the next 12 months, I don't really care. I'm just targeting that move. So if silver can outperform gold, that'd be a good thing. Okay. All right, so here's silver. I mean, that's a pretty nice bump right off the backside of this trend line, still well supported with all these moving averages. You know, I said watch this like 29 to 29.50 zone for support, and also this really key level at 26. So far, this, I mean, technically this is behaving pretty well. If this is, a pullback into find support, and then we're coming back up to hit this measure move, there's my 35. Actually, I think I said 38.80. I'm at 35.80. Sorry, 35.88 is my target one. So am I going to take profit there? I don't know. It depends, but I'm still going higher. I think we can get into the 40s. I'm looking for the 40s plus on silver. Okay, Bitcoin. A little bit of a retreat off that poke at 103. 103.7. I'm sure there's still plenty of bids out there. Just take, if we have a low and we have a high, I mean, it looks like with that 103 level, I'm going to go ahead and put that in as a fib. Okay, spike 605, nice. That's fine. Yep, so we're getting deeper into the red today, which I'm totally okay with. This is why I hedged on MES, and this is why I have the SPY. I mean, being up $3 isn't a big deal, but being up hopefully maybe $10 is better to at least make some money if we have a downturn. By the way, am I good for the next like 6 minutes or so? 6 to 10 minutes? You haven't pulled me off yet. You haven't Sandman me yet. So I'll keep going. So Bitcoin, I'm just gonna drag low to high, and where do we look? So if I saw Bitcoin pulling back into the 382 zone or even the 70% zone, I'd be looking for a bull pattern in here, or some type of, if it dips hard, like draw an aggressive trend line and then wait for the right hand side of the trend line to be adding to it. So, I'll wait. I think Bitcoin getting some dips and pullbacks, post election, we hit 100K. That was a big milestone. It's fine, but I do wonder, I mean, just the way that things are shaping up right now, all this news is coming out this week. Are we going to have like an aggressive pullback on Monday? One thing that the market might spend all week doing, by the way, is this. Let's say we pull back on Monday and we stabilize here, and then the rest of the week we finish right back where we started. So I mean, I might look at some opportunities in the near term to find, something. I don't know. I might look for some opportunities if I spot them. So just seeing. I mean, we have three bullish weeks in a row. If we take out last week's low, that's fine. I mean, does it do any major damage? It just. I mean, this is previous highs. So does it come back down there and test it? Sure. Then look for a bounce. But we'll see. I'm just curious what the week gives us. Last week's high, last week's low wasn't a big week as far as price. I mean, it only moved about 66, 67 points. It's like $6 or $7 on the SPY with an average of like 13. So the volatility again got really, really low. Okay. All right. Anyway, I left off on gold and silver, then Bitcoin. Let me go back to this chart here. SPX. There we go. That's a pretty big directional day on SPX. Here's Bitcoin. I'm going to wait and see if we get some pullbacks into this, like I said, 38% to 70% zone. That'd be a sub 90 Okay, we come in less than 90K. That looks like a bit of a bargain. If we come into around 80K, then I'm probably going to add more to my Bitcoin. I might buy another tranche of IBIT, FBTC. I might put in some options there. I might dollar cost average into just straight up Bitcoin right around 80K. Okay, and I might not get it. I might not get that pullback, but 90K and 80K, that we know there's enough volatility. I just see that we have some post-election inefficiency. So for a healthier bull market, I'd almost like to see the pullback get tested and then resumption. But if we just keep going higher and higher and higher, eventually that runs its course and we still end up coming back to that level anyway. So if we pull back to it now, that looks like a much healthier bull market environment to then, build and base, come back to previous highs over here, and then justify another support level, right? So 90K, 80K, watching those levels closely on Bitcoin.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.